Hi, today we will talk about Coinbase. Coinbase and MetaMask warn over privacy as global crypto rules take shape. Coinbase and wallet provider MetaMask are raising privacy concerns about the latest push to regulate crypto assets. Lawmakers in the European Union on Thursday voted in favor of draft rules that would grant authorities access to details on the sender and recipient in all crypto transfers. The proposal will effectively make anonymous crypto payment illegal. It not only covers transfers made through exchanges like Coinbase Global, but also self-hosted or private wallets such as MetaMask, the most popular crypto wallet with more than 30 million users. The draft law will continue to be negotiated by lawmakers and is expected to go before a European Parliament vote this month. Crypto regulation in Europe is getting messy. It could be a sign for what's next in the US. Anti-money laundering rules in the Europe now cover a transaction of more than 1,000 euro. Lawmakers are looking to scrap that minimum threshold for crypto. Illicit flows in crypto assets move largely undetected across Europe and the world, which makes them an ideal instrument for ensuring anonymity, said Ernest Urtasun, a Spanish lawmaker and parliamentary committee leader, in a statement. With this proposal for regulation, Europe will close this loophole. Azita Kanko, a Belgian lawmaker, added, "We also seek to normalize the crypto world as it grows, implementing rules that create trust." The crypto industry sees the situation quite differently. Before the proposal were adopted, Coinbase CEO Brian Armstrong said via Twitter that the company will be required to collect, store and verify information on users of private wallets before crypto could be sent or received to them by Coinbase customers. In addition, Armstrong said that any time a customer received more than 1,000 euro in crypto from a self-hosted wallet, Coinbase will be required to report them to the authorities even with no indication of suspicious activity. This eviscerates all of the Europe's work to be a global leader in privacy law and policy. It also disproportionately punishes crypto holders and erodes their individual rights in deeply concerning ways, Armstrong said. It's bad policy. According to Coinbase, the parent company of MetaMask, rules to track self-hosted wallet would have to target individual users. This is a much harder political position to be in that enforcement measures targeting companies. Bill Hodges, the senior counsel and director of global regulatory matters at Coinbase, told Barron's in a statement. The regulation will almost certainly not have any measurable impact on financial crime while being most assuredly burdensome on people and businesses conducting lawful activity. Hodges added, European lawmakers still have time to reconsider the regulation, he added, noting that the crypto industry would mobilize against the proposals. Coinbase has much to lose if MetaMask users look for other ways to transfer crypto. The company was valued at more than $4 billion in March after raising $450 million in a recent funding round. Bringing crypto under conventional anti-money laundering laws has proved difficult. Cryptos are transferred on blockchain networks that are decentralized and anonymous by design. Wallets like MetaMask don't require identity verification. They're essentially a browser extension of Internet address that act like a software bridge to the Ethereum blockchain. MetaMask also lets the user create and manage their own identities according to the Chrome Web Store's description. Wallet users generally do have to link their address to a regulated exchange to fund it with crypto. Creating a conduit to verify customer identity information on blockchains is public, permanent, and traceable, but tracking assets from wallet to wallet require blockchain forensics, and wallet users can obfuscate their tracks through technologies like coin mixers. The Russia invasion of Ukraine only underscored the dilemma inherent in the anonymous nature of crypto. Bitcoin, Ethereum, and their peers have provided a lifeline to the global economy for Ukrainians, but they have also raised concerns about Russians using crypto to evade sanctions imposed by the US and alliance. Coinbase and other companies have said they are cooperating with the Treasury Department to block or freeze wallet addresses associated with sanctioned individuals or entities. The war may also be heightening urge to regulate and track crypto. Europe is at the forefront, so it's turning into a massive affair. In the UK, some crypto companies have opted to leave the country instead of trying to comply with a regulatory process they say is unfair and unworkable. Europe's crypto battle plans may also provide a template for US regulatory efforts. President Joe Biden recently signed an executive order tasking federal agencies with proposals for comprehensive rules. In Congress, since Sia, Lumus, and Cordier Gillibrand are working on a bipartisan legislation to regulate crypto companies and digital assets. But privacy concerns don't seem to be a secret cause anymore. More recent ECB research, this time based on discussions with panels of Europe's citizens, emphasizes other competing concerns people might have, such as security and universal acceptance, and ECB board members Fabio Panetta now speaks of a trade-off among those goals. Finance ministers from the currency zone are also set to give their views at a meeting next week. And they are unlikely to want new kinds of financial secrecy undermining anti-money laundering and tax evasion norms. A fully anonymous digital currency would raise seriously concerns, says their internal policy paper that will form the basis of their discussion and what was seen by CoinDesk. Okay everyone, thank you for watching this video and wait for the second part. Bye!